Hi everybody, it's time to talk about the markets with Jim Cramer on the floor of the New York Stock Exchange. All right, Jim, what do you think is driving the declines this morning?
Some of it's Facebook and the recognition that perhaps artificial intelligence needs to be rolled back. That's what really is going on, by the way. Because the fact is that Facebook did some things it shouldn't have done. If they had their board members come out, not just him, they can't just have him, and they bring in someone from the outside to audit things, then I think that they get past this. Now, I've done a lot of work, and I'll do it again tonight, on breaches of faith and how much the stock goes down. And I think right now this is somewhere between Home Depot and Target, which means it's down about 9% is where it'll bottom. And if they do what's right. See, they have to do what's right. If you drag things out the way Target did, that's how you get down to 15. This is not a Chipotle and this is not an Equifax. That's important because that would mean it's more like a Yum Taco Bell, which was down 10%. A Chipotle is a disaster. By the way, Chipotle's up 90 points from the bottom. So ever since they put in a new CEO, it shows you how important management is. But this is really a sell-off about tariffs. And I have a piece that I thought was pretty good this morning. I worked on for a while about real money and about how the elites are on the run. And the elites have been the beneficiaries of our free trade policy. And Trump is siding against the elites. He's siding with the people who voted for him. The elites are in certain states, and he's willing to antagonize the elites in order to be able to help the people who voted for him. And I think that people have to recognize that that's what this is about. It's an anti-elite backlash by our president, and people can't really calculate it. A lot of the business people are just scared because they've never seen anything like it. Obama was very pro-elite in terms of the big companies doing quite well overseas, and not necessarily protecting our interests. So that's what's going on, is the realization that Trump's not necessarily great for the stock market. There was someone who tweeted today saying, hey, you love Trump, and suddenly you hate him in the stock market. Well, I mean, look, things changed. Everything got more controversial out of nowhere, although we should have realized it was eventually going to happen. The president created a 25% tariff on steel and a 10% tariff on aluminum. And it was unexpected to those who didn't know who voted for him. And that's been his style. But it was an attack on the elites who control the stock market. And once people get their arms around that, I think they'll realize why the market's down so much and why it has to do some digesting.
And as you wrote about in Real Money yesterday, maybe Larry Kudlow can change the president's mind on tariffs.
Yeah, I think that's so far when he's been sticking with his Chinese view about the 50, 60 billion in tariffs. That would be something that Larry would have had to agree to beforehand, or else I don't think he would have gone.
All right. Also, Jim, Conagra, quite a different story from General Mills.
Yes, Conagra has the inflation story pretty much under control. Now, they do have the same freight problems. They have some of the same packaging problems. General Mills didn't highlight packaging, but I know that's a problem. And some of the commodities, but they handled it quite well. They saw it coming. I've interviewed them, had them on air. They told you it was coming. They said they'd be able to handle it, and they did. They've introduced a lot of new products, a lot of millennial-friendly products, a lot of products in the center of the store, in the freezer section, that are doing quite well. So Conagra is very different from General Mills. Right now, Conagra is very, very much better run than General Mills.
And then last night on Mad Money, you talked about how McDonald's CFO used the word choppy, but you still like the stock.
I'm glad you asked about McDonald's. I think that what's interesting about McDonald's is the CFO really did drive the stock down, and yet I don't think he really meant that much about choppy. I think he got the wrong word. I think that things will be fine, but that did send the stock down. On a day like today, where all the big internationals are down because the Dow's down, it might be a good opportunity to pick it up. Now, I noticed retail's coming back, and the retailers are doing well, and that could spill over to McDonald's. Now, it could be Darden spilling over too. Now, Darden, they had a moderation, and no one expected a moderation. People felt that maybe Olive Garden would be growing. One of the reasons why I think my wife insists that I call our place that we have in Italy, where we have 400 olive trees, Olive Grove. She doesn't want to be tainted by Olive Garden. Today she looks right.
Well, I'm glad you mentioned retail, because you also highlighted Ulta Beauty last night on Mad Money.
Yeah, when Ulta Beauty has spent, it's done the reset that I always like to see. Everyone knew that it was a fast grower, and it slowed a bit. So all the real high momentum players left the stock. it spent enough time explaining why it went down, and it's got a new group of shareholders who are a little more value-oriented and less momentum-oriented, and that because when they reported a quarter that was disappointing, the stock went up, and that's the sign that the momentum people have left the building.
Sign of a bottom, as you mentioned last night. Meanwhile, Jim, who do you have coming up tonight on Mad Money?
I have Washington Prime, and I've been very tough on the Real Estate Investment Trust because of the problems for retail. Now, I've been also highlighting that some of the mall retailers, American Eagle, A&F, and some of the apparel sellers into the mall, Ralph Lauren, PVH, Tapestry, doing quite well. Look, VF's doing quite well, even though the last quarter wasn't that good. So I need to find out what's really going on, because a lot of the Real Estate Investment Trust people weighed in and felt that I was unfair with my piece. So I'm always willing to show the other side of the trade. That's what I do for a living.
All right, we'll look forward to that tonight, 6 p.m. Eastern on Mad Money. Meanwhile, Jim, we're going to continue the conversation.
Yeah, we're going to go down to it.
On actionalertsplus.com. Please join us there.